And when fiat dies, as it always does, a new system takes its place. And that shift always brings a crisis. And you need that gold and that silver to protect you, not just during the transition, but also to help you really take advantage of those opportunities. But let me ask you, have you ever thought about money like a bridge? Most people think it's solid and built to last, this stuff. But what if I told you that that bridge was made of just paper and debt, and every storm weakens its foundation?
Lynette Zang, a well-known market analyst and advocate for sound money, paints a vivid picture of what happens when our current financial system, built on paper and debt, begins to falter. She reminds us that throughout history, every fiat currency has eventually failed. When that collapse comes, it doesn't simply vanish quietly, it triggers a crisis, one that shakes economies, resets wealth, and redefines what money truly means. In her view, gold and silver aren't just shiny relics of the past, they're your lifeline through that storm. They don't just protect during the chaos of transition, they position you to thrive when the dust settles. Because when faith in fiat erodes and people finally see the paper bridge for what it is, fragile and temporary, only real assets stand firm. It's not fear-mongering, it's foresight. The message is simple: prepare now while the bridge still stands. When the next system rises, you'll be standing on solid ground, not swept away with the current. Because true wealth isn't measured in numbers printed on bills. It's held in something real, enduring, and proven through centuries. If this perspective opened your eyes, don't forget to like, share, and subscribe for more insights on real value and financial resilience.
Starting with the removal of gold from the system in 1971, this chart from the Economic Policy Institute shows it plainly. Because before that shift, wages rose with productivity. Workers participated. But once we moved to a full debt system controlled by the Federal Reserve, private Federal Reserve, that connection broke. And what that really means is that the Fed, neither federal nor holding reserves, gained full control over inflation. And instead of lifting wages, they inflated assets for the wealthy. And the average worker, left behind. Shocking. But today we're seeing the same pattern. Safe harbors, exemptions, and creative approaches. These things are being legalized and are just new labels for the same old tricks. The system is shifting again. It is resetting again, but this time toward digital control. That scares me because I don't understand it. Do you? So let's anchor to sound money. Let's take back control through our global community, voting with their wallets and converting fiat money into sound money. Because the Fed's Michael Barr, well, what did he say? Many of the decisions we face today have in some form been confronted by previous generations of policymakers, of course. And what that means is that they've seen this movie before, and I hope you're recognizing that too. Because in the 1980s, Congress deliberately lowered regulations to help savings and loans. But that miscalculation led to reckless lending, inflated risk, and a massive bust. By 2008, during the global financial crisis, the dollar had lost 95% of its official purchasing power. That means just 5 cents remained compared to the 1913 value and purchasing power. This isn't just inflation, it's engineered erosion. Why is that okay with you? And every reset pushes us further from real value and deeper into illusion. In 2008, the global financial system suffered cardiac arrest and died. The housing bubble was just the symptom, and what failed was the heart, that trust, that discipline, and real value. Policymakers didn't resuscitate it. They embalmed it. They gave it a place to live through zero interest rates, quantitative easing, so that's all that free money, and endless liquidity injections. Free money became the ventilator, securitized debt, the IV drip. The illusion of recovery was maintained not by healing and change, but by sedation. Markets rallied, but fundamentals flatlined. And what we're living in now isn't capitalism. It's kind of a simulation, and it's a zombified system animated by central bank interventions, masking insolvency with stimulus, because that money has to go somewhere. So this is the pulse check of a dying system, because you need to know where we are. From 1950 to 1965, the central banks were net buyers of gold, anchoring their currencies to real value, reinforcing trust in the system. That's what gold always does. But after 1965, the tide turned and gold was sold off or leased off, or all sorts of different funny ways that they could do it. It's probably why we haven't heard anything about the audits in Fort Knox, frankly, because fiat money took center stage and the illusion of stability was born. Then came 2005. The sellers became buyers again, and not just cautiously. Over 1,000 tons a year for the last, we're now in the fourth year. It looks like we're going to hit that again. That's not portfolio rebalancing. That's triage. That's central banks, the architects of fiat and inflation. They aren't hedging, they're bracing. They know what's coming because they build the system that's now cracking. Gold and silver aren't nostalgic. They're sovereign. No counterparty risk, no printing press, no expiration date. This system may be dying, but you don't have to go down with it. Let Zang Enterprises help you build a future rooted in sound money. What a concept. Because this isn't a someday conversation or a future conversation. The system is already shifting. And I hope you can see it because it's happening kind of quietly, rapidly, and without your consent. Every delay is a risk.
Since the removal of gold from the U.S. monetary system in 1971, everything changed. Before that, productivity and wages rose together. Workers truly shared in prosperity. But once we shifted into a full fiat and debt-based economy controlled by the Federal Reserve, that link was severed. Inflation no longer lifted paychecks. It inflated assets for the wealthy while leaving the average worker behind. Today, we're witnessing another reset, this time toward digital control. The illusion of growth continues through zero interest rates and endless money printing, but beneath it lies a zombified system, one sustained by stimulus, not strength. The dollar's purchasing power has been engineered to erode, and trust in the system is quietly dying. Meanwhile, central banks, one of the very architects of fiat, are buying gold again, not for speculation, but for survival. It's not portfolio management, it's preparation. Because gold and silver remain the only assets without counterparty risk, no printing press, and no expiration date. This isn't about panic, it's about awareness. The system is shifting again, faster than most realize. And those who understand sound money now will be the ones standing on solid ground when it all resets. Let's get into the interview.
What happens when there is a major market implosion? And I'm telling you, everything implodes, no matter how safe you might perceive something to be. And there is a true flight to safety into gold, and back in those days, into treasuries. So it was really his oil wildcatter friends that taught me how to read the technical language of the market. because to prop up asset prices, what do central bankers do? They systematically reset the currency's value. That's actually what inflation is. They just do it slowly enough, that 2% target. So you can see between 1960 and 1980, the dollar's purchasing power collapsed. And that set the stage for the savings and loan crisis.
When a major market implosion hits, everything goes down. Stocks, bonds, even assets once thought safe. In those moments, there's only one true flight to safety: into gold. It's not panic, it's history repeating itself. Because every financial storm exposes what fiat currencies really are: promises slowly losing value through inflation. Central banks know this. To keep asset prices afloat, they quietly reset the currency's worth, bit by bit, through that so-called 2% inflation target. But when you zoom out, the picture is clear. Between 1960 and 1980, the dollar's purchasing power collapsed. And that erosion of real value didn't just happen. It set the stage for crisis after crisis, from the savings and loan collapse to the bubbles we see today. This is why understanding the market's true language, beyond charts and data, matters more than ever. Because what's really being traded isn't just assets or yields, it's confidence. And when confidence breaks, gold doesn't just hold value, it becomes value. The cycles are repeating. The signals are flashing. The question now isn't if it resets, it's whether you'll be ready when it does. Like, share, and subscribe for more insights into protecting your wealth and your future.